Chat, and I'm Jim Rapon with Coldwell Banker Danforth, here with my partner Rhonda. Rhonda, would you like to introduce yourself?
Sure. Thanks, Jim. I'm Rhonda Porter, and I'm a licensed loan officer with Mortgage Master Service Corporation, and I'm the author of the blog, The Mortgage Porter.
So today we were going to do a little discussion about some of the things that have been going on with the TRID. What does that stand for again, Rhonda?
Oh my gosh, it's Truth in Lending. Oh gosh, disclosure. It's the
What?
truth. It's the Truth in Lending Disclosure Reform. That's what it is.
Okay,
So yeah,
it's okay.
we
We
have
have some
other names for the
acronyms,
lending industry. Yeah.
really, and that's why I asked you because I couldn't remember. Anyway, most of these things have gone into effect for the mortgage industry. They're the ones who are most affected, and most of them went into effect as of October 3rd. And they affect a whole bunch of stuff. Rhonda talked in depth about it in our last episode 46 a couple weeks ago. I think that was October 20th. So if you want to go back and review that, anybody who's looking at this, you'll get a much more in-depth background from the mortgage perspective. And I thought today I would talk about how that's affecting what we do as brokers when we're working with customers who are buyers, and how that's been affected through some of the new changes in our real estate forms. So that being said, Rhonda, jump in if you've got questions about this, but I think maybe this will be mostly me talking unless you have some ideas or questions to help clarify. So I'm going to screen share here a copy of one of the purchase and sale addendums. It's the one called the Financing Contingency. We refer to it as Form 22A. Can you see that on screen, Rhonda?
Yes, I can, Jim.
Okay, so I'm assuming everybody else can as well. So this addendum, if you can see up here, revision 715 means that 2015 in July, this was revised. But it was revised with the end in mind that it would also cover these new changes that TRID would be rolling out in October, and so it does. Couple big things here at the beginning. This form has been pretty revamped, but one of the things that came up was a lot of people don't haven't in the past known really the definition of what a loan application is. And this form has actually incorporated the language that the CFPB, do you remember what that one stands for?
Consumer Financial Protection Bureau. Thanks.
There's going to be a test of Rhonda's acronym. And my failure at remembering.
Yeah.
Anyway, so yes, so before it basically just said down in this part here that the application was, a loan application was submitting information to the lender, but it didn't define any of that. So now it's been defined. So an application includes the credit, income, social security number if required, purchase price, loan amount, and all of that. So this is important because we say in the addendum that the buyer is making a declaration that they will make this loan application within 5 days if it hasn't been changed. The boilerplate's 5 days. And that is one of the requirements of the contract. That becomes important if there's a reason down the road that the loan doesn't go through and the buyer wants to recover their earnest money. So that's
Jim, if I could say something too.
Please.
With the application, as far as a lender's concerned too, with regards to TRID and our new requirements that went into effect October 3rd, we don't, oftentimes I think buyers and sometimes even agents might picture that like making formal application means that the borrower has sat in front of us and filled out the 1003 or loan application. But in reality, it's receiving all 6 of those items that is referenced here in the purchase and sell addendum in any format. So a borrower can just call and give us this information. And then as far as the lender's concerned, we have an application.
Correct. Yes. And that's really important. And one of the reasons in the past there's been so much miscommunication, and mortgage brokers and real estate brokers have bantered around the term loan application without really knowing that or without having any basis to define it for a long time. So this is a good thing. So that being said, that's kind of a major change. The other big one, or one of the other big ones, is this paragraph in here, the second paragraph that talks about loan information. So in the past, we've had a process where we can request that the buyer supply the seller with the information about the loan process, but it has been very loose and not defined. So here we have a process now where the seller can officially request for loan information at some period. 10 days is the default here if it's not changed, and then that information has to be supplied within that 10-day period through this specific form, a 22AL, or the buyer can accelerate the right to terminate. Now, the right to terminate is, again, something that's always been in here or been in here for a long, long time. And we've had that for when we think a loan is not going to be able to perform. But usually it is set for a good period in the future, in this case, 30 days if not filled in, so that it's not something that the buyer really needs to worry about early on in the loan process. That will change if a seller pushes this forward and requests early in the process to get more transparency about the loan process. So this is probably a really good thing. There's probably going to be some loan officers that are not aware of this, and there's probably going to be some that push back and may not like this, or think that that this is not true authorization for them to release.
Well, Jim, I mean, I have a question about that. And so you're saying the seller will contact the lender directly? I mean, how would this work?
Good question. No, the way it should be working is that the seller's agent, the listing agent, would be the person who would contact the buyer's agent. They would give them this form that the buyer then would have the lender fill out.
Okay.
Okay, and then the buyer or the listing agent, the seller or the listing agent could then verify that information, but it would be up to the buyer to actually fill it out. And it's an attempt to give a lot more transparency to the seller in terms of knowledge about what's really going on with this loan, and do they really have a probability of being able to close, or are they on shaky ground? And in the past, that's sometimes been the loan officer would hold that back out of loyalty to their client, not wanting to disclose something that might get them in trouble. So
just our privacy regulations too, as you kind of mentioned. I mean, there
yes.
are a lot of things that we can't disclose without the buyer's consent. So, but that form sounds like it would give us that authorization. Is there a limit to how many times the seller can request this or use this form during a transaction?
That's a great question, and I don't know the answer. I think it's intended to be used just once. Okay. If the buyer does not comply, and there is a section in here that if they haven't in a timely manner completed it and given it back, that at that point the seller can then push the right to terminate and accelerate that as well. So I think it's meant to be just once. Okay. But I don't have the answer to that. I started this whole conversation with, I'm not an attorney and I can't give advice or even opinions about this, but I'm just sharing with you what I've been hearing through the internet and other trainings about this. So take it for what you will. Please don't use anything I say as truth. If you're not sure and you can't get a clear answer from your real estate broker about any of this, go to a real estate attorney. So
I'm not an attorney either, just for the record.
disclaimers. Yeah. Okay. So anyway, that being said, that's sort of how things have changed in the main part of the 22A. The other part that is in here is the part about the CFPB that's specifically meant to kind of deal with the loan estimate and closing disclosures that they're required. So in the past, we had the good faith estimate, and we had and that's been replaced by the loan estimate. I think it's the same time period, right, Rhonda? The 3 days after loan application.
Right, 3 days after, 3 business days after loan application.
Right.
We have to send the good faith or the loan estimate. So
Okay.
depending on how it's sent, the borrower may not receive it in 3 days, but it will be. So it's possible that a lender might mail it in 3 business days too.
Okay, that's good to know. And where this may come into play for the seller is that if they go through a process of going, we want to terminate, this buyer doesn't look like they're going to perform, and then the buyer's saying, well, I want then my earnest money back if you're going to kick me to the curb. They have to supply, they've always had to supply a letter from the lender showing that they've applied on time, that they had the funds to close, and their reason for not being able to get the loan. That what they've added here that they didn't have before is through this new CF or TRID requirement is that the loan officer has to supply a copy of that original loan estimate that they were required to do in those first 3 days. So that kind of, I think that's a good way to sort of cross the T and dot the I that it truly was applied for in a proper manner. Does that make sense?
Yeah, it does.
Good. All right. So, and then the closing disclosure, that's an interesting one because that again is to me like a HUD, right? It's a closing statement that has to be done or supplied within 3 days before this new word of loan consummation, which sounds to me like a marital thing.
Yeah, you would think. You would think. The closing disclosure does replace the HUD-1 settlement statement, and it is provided to the consumer 3 days before they can consummate. And depending on what state you live in, consummation has different meanings. So for Washington State, it's for when you are obligated to the mortgage, and so that is basically when you sign the note. So you cannot sign your final loan papers until 3 days have passed after you've signed and have signed your closing disclosure.
And if something changes in that, then that's what triggers you needing to have another 3-day wait period, right?
Right. Right.
Yeah. Okay. And that was my kind of understanding too. So there's a couple of other things about the financing contingency that I think are important and really haven't changed that much, but a lot of people don't realize that this is the case, and they go into a transaction thinking, well, I'm going to just get a loan on my own, so I don't really need to worry about a financing contingency because I'm sure I can get one. I've got a home equity line of credit or whatever. I'm sure I can get a personal loan. You're still required by law to disclose that you're doing that, or if you ever want any recourse, you're not going to be able to get your earnest money back. Now, again, I'm not giving advice here, and I'm not an attorney, and I'm not telling you what as will actually happen. I'm just saying that this is something that a practice that I've seen done that it seems to me puts clients at risk. And part of the job of having a good realtor is to make sure you don't accidentally go down that path. So let's say you want to purchase a home, you have cash, you say, well, I don't really need a financing addendum, but I do want to make sure the property is worth what they say it is. Inside the financing addendum, you have an appraisal contingency. It's at towards the end of the second page here, the appraisal less than sales price. And that protects you when you're getting a loan to make sure that, once the appraisal is done, if the property is not worth what the sales price is, and the seller won't lower it to that new adjusted price, you have an opportunity to have your earnest money returned. Well, if you're not using this addendum, that goes away. So there are some addendums for that. There's a 22AA, which is a appraisal only. Oops, I got a periscope. Sorry about that. There are situations where you can just have the appraisal done and not have a loan, and that still protects you. That's a 22AA. Let's see if I can pull that up. I want people to see that one, and that's one, again, your agent should be able to find for you pretty easily and use in your transaction. If you're going to have that type of a transaction. Oops, I'm trying to share it and I can't find it. Share it. There it is. 22AA. Did you see that one?
Yep.
Okay, good. So sales, yeah, appraisal debt, and this is again appraisal less than sales price, and it goes through the process. Now, if the seller is willing, let's say the appraisal comes in at $30,000 under what your original sales price was. If the seller says, okay, I'll drop it that amount, then the buyer is still obligated to move forward. But it protects them from getting into a situation where the appraisal is, definitely a lot lower, and then they can't get out. So that's an important one. The other one that I was going to mention is one of when you have when you're paying cash and you need to verify the funds. So that's one called the 22EF, and let's see if I can get that one up here. 22EF, screen share. 22EF, there it is. Evidence of funds. So this one is the one that we often do to show that, yes, we are paying cash. So if someone purchases a property and they say, I don't need a financing contingency because I'm paying cash, the agent, it's important that the agent work with the buyer to make sure that they disclose that they have the money. Otherwise, you're going to probably have a seller that is concerned, especially in a multiple offer situation, that they might be dealing with someone who their funds aren't liquid, that maybe they really don't have the funds. They're waiting for grandma to say they're going to send the money or something like that. This is just a simple form that you would show how the source, where the source is, documentation of the source. Obviously, you'd want to redactate any kind of sensitive information like statement account numbers and stuff like that. Black them out and that kind of thing. But you want to include this with your form if you're not getting regular financing as well. So just a couple of things I still think are important to know when you're putting together a financing contingency or not a financing contingency, which may be the case. Right. So that's the main things with TRID and how that affects sellers and buyers in the new world. It's not near as complicated as it is for mortgage brokers, but I thought it would be a good follow-up because you did such a great job explaining all of the details that are going on with the mortgage people with these new regulations.
Oh, thanks, Jim. Yeah, it's there is a lot going on, but and I think there was a lot of fear or angst before October 3rd, but really the transactions, everything seems to be coming along fine, and knock on wood, not a lot of bumps in the road as long as everybody's informed and realizes that the process is a little bit different now.
Right. Yeah, and I've seen a case or two where things have to go back and get re-signed and stuff, but I think in most cases the loan officers are on top of it. I think escrow is working very hard to try to make sure that all of these things are done. I work often with First American, as you know, and they have had their attorneys give a lot of advice on what needs to be signed and how it needs to be signed to make sure it doesn't come back and haunt them, and then they have to redo it again. So I imagine that's true for all or most of the escrow places out there.
Right.
So anyway, that's about it for today, unless you've got anything you want to add.
No, I think that's great. Got to save something for our next show.
Yeah, right. And I wanted to mention to everybody, if you're watching live, do get out and vote today. There's a lot of stuff out there. Right. Seattle City Council is completely changing their format. It's geographical district based now, so the representatives are supposed to be from those neighborhoods, and that will change the face of politics, I'm sure, for Seattle. And then there's all kinds of other initiatives around taxes and money that are countywide, statewide, et cetera. So get out there and vote. You got to get it postmarked by tonight.
Yep. Very important. I got my ballot in.
Yeah, me too. So anyway, okay, sounds good. We'll see you soon, everybody. Thanks so much. We'll be back in another couple of weeks.
Yep.
Bye.
See you soon. Bye-bye.